Welcome to When the Facts Change for this, my regular weekly show, released every Friday morning, exclusively on my When the Facts Change Substack. Now, the UK government's on the ropes. We're now in the end game. Prime Minister Keir Starmer is unlikely to make it to the end of 2027 as Labour leader and Prime Minister, let alone to 2029, the scheduled end of this Parliament. Even if he does stay, Starmer will need to form a Faustian pact with the mass ranks of hard-left Labour MPs, led by rabble rouser in Chief Angela Rayner, along with Ed Miliband, the favourite of tens of thousands of left-wing Labour activists across the country. The UK government has for a long time paid a lot to borrow, with the big global investors who lend government serious money eyeing the party's inability to control the public finances, pushing up sovereign bond yields. Over this last month of Labour leadership turmoil, the UK's 10-year gilt yield has surged, with the British government paying more to borrow than any other G7 country, more than Malaysia, South Korea, Greece and Spain, more than Morocco, with an already £100 billion plus annual debt interest bill spiralling upward, money diverted, of course, from schools and hospitals. I discuss all this and more with the brilliant Helen Thomas, the CEO of financial consultancy Blonde Money. Across the other side of the world in Japan, we may see more financial fireworks in the aftermath of a stunning election victory last Sunday for the incumbent Prime Minister, Sanae Takaichi. Now, Takaichi's dubbed herself the Iron Lady in honour of Margaret Thatcher. But while she's certainly strong on defence and patriotism, as I warned in last week's Sunday Telegraph, Takaichi's planning to borrow and spend a huge amount of money in a bid to get the Japanese economy moving. But with government debt exceeding 230% of GDP, that could rapidly unwind the so-called yen carry trade, with foreign investors who borrowed heavily and cheaply in yen rushing to pay back now increasingly expensive yen-based loans, selling off shares and bonds elsewhere to do so, sparking financial turbulence across the world. I'm joined by the highly influential Japan expert Professor Richard Werner. And as it happens, I'm recording this episode of When the Facts Change from Oman. I'm here on business. It's just across the Strait of Hormuz from Iran, of course, a mere 20 miles away. Now, Iran could be facing regime change for the first time since the Iranian Revolution of 1979. As thousands protest against the Ayatollahs and with the US Navy nearby, America and Iran are negotiating, here in Oman in fact. This region really is on the brink of a major military conflict, with potentially huge implications for the Middle East and the world. I'm delighted to be joined by former UK Ambassador to Iran, Nick HOPTON, who knows the Middle East extremely well, having also been British Ambassador to Yemen and Qatar. Join us for a detailed discussion. So excuse me for not being in my usual studio, I'm on the road. But do stay with me for another packed episode of When the Facts Change. Helen Thomas, great to have you here with us as ever on When the Facts Change. A lot going on in global finance. I'm in the Middle East, as you know. What I wanted to talk to you about as a fellow Brit, as a fellow political nerd who is steeped in finance, what are the British government doing to the UK's reputation on international markets at the moment? And it's not just Labour. We're not here to have a go only at Labour, though we are. Endless Tory psychodrama when they are in power. Now it seems endless Labour psychodrama when they're in power. The Tories were fiscally incontinent, left the country with, national debt at 100% of GDP, bar the shouting, taxation at a 70-year high. Labour are even more fiscally incontinent. What are the financial implications of this Westminster circus?
Well, I've certainly had a number of people get in touch with me over the last week, probably same with you, Liam, from around the world, saying, what is going on? And I'm talking about investors. I'm talking about economists. Who, of course, the UK it's a G7 economy and it's part of what they look at. But broadly speaking, you're right that generally after, hundreds of years of our long institutions, we're considered to be relatively safe. And of course, the greatest mistake that was made was thinking that Labour's massive landslide victory meant that the UK government was stable. But actually, the flip side
Thank you, Andrew Marr, for that scintillating analysis.
But the flip side of a huge amount of seats is you become both government and opposition, and that is that uneasy truce is clearly now very much broken out into the open, and we are at a very critical juncture, I think, in terms of how the international investment community looks at the UK, in terms of how and when will the end of Starmer come about? Because it's basically, for some people, this is some investors, they've only just kind of cottoned on to this struggle deep within the Labour Party of where it's going. And it's like the 5 stages of grief. There's still a lot of denial about it. We haven't even got to the point where, we are in the end game. Everyone knows we're in the end game. Keir Starmer knows he's in the end game.
He's not going to make it to 2029. He's not going to make it to 2027.
No, exactly. And so really, now, here's the other thing I would say to clients. What they see as rational is not how a politician sees things as rational. Now, if you're an investor or steeped in economics, you think a certain path is sensible, such as the tax burden getting to such a level where then if you go further with that, you actually crimp growth and you crimp your revenues. Now that's, yes, it's somewhat of a political argument, but to a lot of people economically, that's how they're looking at things. So the idea now that this government will take a turn more to the left is something that a lot of them can't get their heads around, because that doesn't seem rational. But a politician isn't really thinking about that. They're thinking about staying in their job, pleasing their colleagues, pleasing their voters. Absolutely key by-election coming up in Manchester. And I think actually, this new constituency of Gorton and Denton, this part of suburbs of Manchester could have huge international ramifications, depending on that result, of course.
Because if Labour lose, then Starmer will be blamed for not letting Andy Burnham, the current mayor of Manchester, run. And Andy Burnham, I think it's pretty clear, would win in Gorton and Denton. I know Manchester well. I know Andy Burnham well for my sins. He is incredibly popular in the northwest of England, whatever you may think of some of his policies, and he would win in Gorton and Denton. It may be now that the seat instead goes to Reform. Matt Goodwin, who we both know well, a very prolific substacker in his own right, is running. He could win it for Reform. The Greens could come through. You've got pro-Gaza parties who are running it. And so how would it be taken on international markets, Helen, very much your milieu, if Labour lose, Starmer gets the blame, and it looks as if he's literally out the door with Labour MPs and party activists giving him a boot up the backside?
Well, then the question is purely on the economics. And again, investors are not making political judgments here. They're simply saying who follows. Is it someone to the left, or is it more of a centrist Blairite candidate? Now, of course, this scandal that is engulfing the government revolves around Peter Mandelson, a key architect of New Labour. That tends to suggest that the Blairite wing of the party is now kind of been beaten back down, and that the left are resurgent. I mean, I think it's quite notable this week that Ed Miliband was on the media round and gave a very vocal backing to Starmer, but talked about it's about class warfare and we have to get back to our roots. And then Keir Starmer himself talked about him being working class within a few hours of that. Here's the big question I get from international investors. What would Ed Miliband as Chancellor mean for gilts, for sterling? Or a constellation of a shift where that, this cabinet does move left. And by the way, we could get that without Starmer leaving.
I mean, he may have to do that anyway to survive, as the price of his survival.
Well, I think it's quite telling that we're this week, we are at this point where those to the left of the party, so Burnham and Miliband have said, support Starmer. There needs to be change, but, we can support this. We don't want regicide. So here, this obsession with this word, because it's slapped onto the Conservative Party that they're regicidal but not suicidal, although in the end they got a bit suicidal. Here, the thing for the Labour Party, I say to people, is, well, they're kind of fratricidal. They are factionalised to the extent of, and sometimes it's not even ideological, it's personal. It's that person, kicked me out of office or beat me in a selection contest. I mean, I know it sounds really like pathetic sometimes when you talk about these small things, but they do matter in politics. And so where we stand is, how can that fratricidal party with an undercurrent of a push-pull between the sort of Blairite and left wings survive and deliver at a time when as you started off by saying, we were at 100% debt to GDP, big deficits, growth still a bit wobbly, although there's some better signs emerging. That isn't going away even after things have changed. So I think to conclude on all of this, international investors are waking up to the risk. They're noting that there is a leftward turn coming, and it's just a question of when. And then that's why you've seen quite wild oscillations in the price of gilts. And you talked about the economic cost. Well, whatever happens, when you have more volatility and more uncertainty in your bond prices, that exacts a cost on the economy.
The 30-year way above 5% consistently has been for a long time. The 10-year way above 4%. At the long end, the UK government's paying a lot more for money than it ever did under Liz Truss at the peak of her so-called mini-budget crisis. Helen, to what extent do you think we're going to see a continuation of this? Is this ever going to calm down under Labour, or do you think it's going to stay? I mean, what is going to get our 30-year back below 5%? What's going to get our 10-year back below 4%? The cost of money for the British government. Do we need? I mean, I don't think a change of government to another party is going to do it. I think we need to have, as a country, a kind of come to Jesus moment where, and I think I'm coming to the conclusion. I've thought this privately for many, many months, but I'll say it publicly. I think only a proper meltdown crisis is going to move the political needle enough so we can get back on some kind of even keel. And I'm well aware, as I say the words, that a proper kind of crisis, that is going to impact negatively the lives and livelihoods of tens of millions of British people.
You're right. It will have a huge human cost. Let us trace why we're in this position, however, which is largely that huge pile of debt we're talking about. Yes, some of it incurred prior to the pandemic, but the pandemic really cemented some serious problems. Now, everyone remembers furlough, people paid to stay at home, stimulus, etc. There is a cost to that. There was actually a recession. It wasn't cancelled, that recession. It was merely postponed. The one that sort of could have happened in 2020, 2021. I mean, yes, everything shut down and reopened, and then we sort of started off again. But if you like, the bill is coming due. And it's one of these things where, unfortunately, if you don't take the short-term pain, it builds up into long-term pain, and that's kind of what you're talking about. And then, but here's an interesting flip on this about voter attitudes, because it's about voters, what they want, what they accept, what they need for change. I mean, look, in 2010, okay, the Conservative Party did not get a majority, but they had a mandate for austerity, which they then pursued. Voters did not give them a majority to do it. They said, "Oh, I'm not entirely sure," and okay, go in with their Liberal Democrats, and and we got through that. Gilts were on a quote bed of nitroglycerin, as Bill Gross put it at the time, the bond king. So we have been through this before. Although, by the way, debt to GDP was more like 60% back then and 50%, not 100. So that's why it's even tougher now, and why we're on this precipice that you're talking about. But I will say there was a British social attitude survey which has showed, I think, the highest proportion since records began in 1983 of people wanting to cut taxes and cut spending. It was 19% of people. Now, okay, a lot of other people still want some of those spending to rise. It's sort of, I gave a wry smile when I saw that, because I thought, well, hang on, that's what the Truss project was going to go for. I know that the sequencing was terrible and it was all a bit chaotic. So effectively, those 19% of people should have supported Truss and the Kwarteng budget. But look, we're going to have to change. Yes, not just party, but a whole way of looking at things. And I don't like to say this, I'm a massive optimist, a bit like you, Liam, right? We see good. We see the good in our public servants. We see the good in our voters and the good for this economy and great things Britain can do. But you have a huge social crisis like a pandemic, a huge economic crisis. You do get a political crisis, and we're not quite through that yet. This is just the latest iteration of it.
We are eternal optimists. We are both patriots. We do both believe in the UK, hence our consternation at the current state of affairs. But you brought up the little signs of some kind of growth uptick. Just outline those briefly, Helen, because it is important to mark those.
Well, we had a solid, better than expected retail sales number. I think it was up 2.3%, more than expected for January. Now, you could say that's a bit of just a sort of flip after kind of depressed sentiment into that budget at the end of November. And some of the other, data that's floating around is marginally better than expected. I would say that it looks like seasonally we do have, as an economy, tend to have a good start to the year. So we don't yet know if this is kind of much better than that would normally be the case, but there certainly is some of that going on. We've got the Bank of England have been cutting interest rates. Now, we could talk about that, Liam, because it might be that, that's not sensible, but either way, they have been cutting interest rates. They didn't most recently, but it's on a knife edge as to whether they'll cut again. That leads into, by the way, you talked about the longer end of the yield curve. So although there are good things in terms of stimulating sort of short-term consumption, if you cut that overnight rate, you will end up potentially with a steeper yield curve if you've got a lot of bonds to issue in the longer end, and that is, again, it is not always that helpful if you haven't got the kind of growth to back it up.
Yeah. That's well put, Helen. Finally and briefly, because we're about to hear from Richard Werner, who, as you know, is steeped in the Japanese story. To what extent you and your colleagues on financial markets talking about the yen carry trade? I wrote about it at the weekend in the Sunday Telegraph. I said that Japan's Iron Lady poses dangers for the world economy, talking about the unwind of the yen carry trade. Is that a current theme? Could it happen?
Yes, absolutely. That's a current theme. A lot of focus on the Japanese yen, which has been very volatile. It's been up at multi-decade weak levels against the dollar. And the Japanese have never been shy of intervention in their markets. So there's questions over whether they try to kind of manipulate this pressure valve, if you like, of the currency being weaker. Look, I think we are at a really important point for the Japanese economy with this huge mandate that Takaichi has gained in this just astonishing electoral victory that she's got. Her party was polling pretty badly, and she had a huge personal approval rating. Doesn't necessarily mean it translates, but it did this time.
Yeah.
So look, she's got
a super majority. It's unbelievable.
It is unbelievable. Now then, the question is, Arbonomics 2.0 under Takaichi, this kind of reflation, which, by the way, for people in financial markets is, I mean, I've been here, 25 years doing this, and this is a complete turnaround in what you think about Japan, right? Japan, for all that time, the lost decade became the lost decades. Deflation, zero interest rates, just, a complete mess. The Bank of Japan was buying all the bonds, huge amount of quantitative easing. Now they've actually got some inflation. They've got wage inflation. They've got more female participation in the labour market. All of these things. By the way, their Bank of Japan Governor Ueda made a speech on Christmas Day, no less. Love it when they do that. And talked about these structural changes in the Japanese economy. Is the reflation trade going to completely upend the way that we look at the Japanese yen and the Japanese economy? And that would have profound implications for that carry trade.
As the yen goes up, it becomes more expensive to repay the loans that you've borrowed in yen, to invest in your AI stocks in the West, to invest in other high yielding assets. So you then sell those assets to repay yen loans that are getting increasingly expensive to repay. How quickly could that happen? And are there any signs yet that it is happening? The yen's up 1 or 2% since that supermajority last weekend.
It is. I think all eyes on the Bank of Japan. They have been trying to raise interest rates very slowly, trying to normalise them. So it'll be a question of whether perhaps they actually accelerate that process, which would then feed into a stronger yen, which would then kind of, we could get into these loops.
Yeah.
And also the other point being, if there's a huge amount of Japanese companies that are now going to reassess whether actually it's better to stay at home with their money, bring the money home, invest it in Japanese bonds. Why put it in a gilt when things are looking a bit unstable?
There's US Treasury bills now, the Japanese, because the Chinese have been divesting. Japan, even though the state is massively indebted, the country as a whole is one of the biggest creditors in the world.
Yeah, it is. And there's obviously a national security dimension to this. Takaichi has a very hawkish approach to security for Japan. I thought it was very interesting that the US Treasury Secretary, welcomed her appointment, her supermajority, and said, she is a strong ally. Could there be, this is something currency traders look at a lot, is there a kind of accord developing on between the US and Japan on the currency? And that would have very profound implications. So I think Japan could well be the canary in the coal mine, and it's certainly one that everyone needs to keep an eye on this year.
Helen Thomas, as ever, great to have you on When the Facts Change.
Thank you, Liam.
Richard Werner, great to have you with us here. We've just had an election victory for Sanae Takaichi. Forgive my pronunciation. I know you're a Japanese speaker. She won a big She won a big victory. The LDP are now firmly ensconced. She's got a mandate for her policies. What do you think of her policies?
Well, certainly she's savvy with media, with young people, with social media, and she saw that this was a way of getting a strong mandate with the public, but also with her colleagues and different factions within the LDP, because that's, it's important in all the horse trading among politicians. And so now she has that, and that really means she can implement her policies. So that is the key question. What are her policies and what do we think of them? Well, certainly what has caught the headlines also in recent weeks was a foreign policy, or hints at her potential foreign policy, because she's made some statements that got the Chinese leadership quite upset concerning Taiwan, and people have to realize that, Taiwan is a bit of an issue. It's located between China and Japan, and until 1945, for half a century, was Japanese. From 1895, when Japan won the war against China, and then took Taiwan and some other places, until 1945, it was part of Japan. The highest mountain of Japan was in Taiwan, Now it's Mount Fuji, back to Mount Fuji again. So there is that, clearly, and, in that sense, there's a bit of sensitivity on both sides. But, of course, it's a hot topic because of the way Taiwan has also become an issue between the US and China. and the heat being stepped up there, a little bit reminiscent of what happened 2010, 11, 12, 13, 14 with Ukraine, between essentially the US and Europe partly involved, and Russia. So that's a pretty hot issue. And she was, the prime minister was perhaps somewhat less diplomatic in some of her statements. And the question is, why was that necessary? I would say, well, let's wait a little bit, because it could have still been partly part of this election campaign that she knew she was going to call. This is a snap election, right? So the opposition only had 16 days to prepare.
Been leader since
but
last
she may
October.
have known
She's
that.
been the leader and the prime minister. Yeah.
Yes, only since October, but she called that snap election. But she may have had that in mind for quite a while, trying to build up her social media profile, which she did very successfully. Millions of particularly young followers on the social media. And a statement, just being a bit more sort of hawkish, somewhat, critical of China. She could have been an electoral policy, because that way you also get votes from a different age group, not just the young voters. And so we have to wait. I mean, she's known as being, having been mentored by the previous most long-standing Prime Minister Abe, Shinzo Abe, who was a bit of a hawk on China and sort of military presence, but was always cautious not to take things too far. So there is still, I would say, okay, let's wait a little bit. This could have been just electoral, noises in order to get a bigger vote. But potentially something to watch, because I think the world just doesn't need another area where actually a serious war could break out, because the comments were about war. And I don't think really we need that at this stage.
So she's been praised by President Trump. She is hawkish, as you say. Shinzo Abe was her mentor, the Japanese prime minister, who, of course, after he left office, was tragically assassinated in 2022. Another of her mentors is, of course, Margaret Thatcher. She poses as the Iron Lady. But I think there's a contradiction here that isn't widely understood outside of financial circles, and an area where you are one of the world's leading experts, if I may say so, Professor Werner, and that's her economic policy. She's got an enormous national debt. Japan has 230% of GDP national debt. We've seen Japanese bond yields been going up sharply by Japanese standards since she came to power, because she wants to do a massive fiscal expansion. Well over $100 billion, $135 billion equivalent is the number that is bandied around. She wants to get the Japanese economy moving. But there's a lot of concern, isn't there, that as those Japanese bond yields keep creeping up, the government being charged more to borrow by the market because it's taking on more liabilities, there's concern that that could spread across the world. There's concern about the unwinding of the so-called yen carry trade. Can you, in the way you do so, can you explain that in a nutshell, and why people across the world should be concerned about what sounds like a very arcane financial concept?
All right. Well, let's look at the basics. What actually has been happening in Japan? So Japan has been in the 20-year recession, which was very simply due to the fact there was no bank credit creation. That, of course, in the post-war era was very strong as a driving force behind the high growth system, is bank credit, including by hundreds and hundreds of small banks to small firms for productive purposes. That gives you business investment, that gives you growth, job creation. That was the high growth model, and China copied it, and it's worked pretty well also in Korea, Singapore, and so on. So then what happened is the Bank of Japan, as I show in my book, Princes of the Yen, the Bank of Japan forced the banks to switch and create a lot of credit, not for business investment, but for real estate purchases, real estate speculation. Because bank credit creation is money creation, you then get an asset bubble, which was the great asset bubble of the 1980s. The Bank of Japan then, when we were at the peak of the bubble, by the end of the decade, tightened credit, forced the banks to restrict credit. And of course, you're pulling the rug out from the system. You create a massive banking crisis. Banks then are burdened with huge amounts of non-performing loans, and they're paralyzed. They will stop lending. And now this is something that doesn't have to happen in the first place, but obviously if you have the right credit policies, right central bank policies, but then also if it happens, you can quickly end it. If you're the central bank, there doesn't need to be fiscal intervention, government intervention, or tax money used. Central banks just do this through what I proposed, QE, the first version, QE1. The central bank buys the non-performing assets of banks at face value, move it to the central bank balance sheet. Doesn't create money, doesn't create inflation. There's no costs. You just get rid of this problem in the banking system, which the central bank created in the first place, so they should also clean it up. They didn't do that. Instead, everyone in the media blaming the banks. You could have then also adopted the second policy, which is force the banks to increase credit. There's different ways, but one is for the central bank to buy assets from non-banks, which forces then, when the payment is made to the non-bank sellers of assets to the central bank, to their accounts, then the banks create new deposits as they receive reserves from the central bank. So that could have been done too, but wasn't done. And other proposals I made, that the government stops issuing bonds and borrows from banks through bank credit, loan contracts, which is also a very simple way that was very successful in some other countries in the past. That was also not adopted. So the Bank of Japan poo-pooed all that officially and said, no, it's not going to work. We're not going to do it. We're not going to do QE. Then they relented by 2001, said, okay, well, we'll try this QE. But they didn't really want to reflate, and really did this only to prove that it doesn't work. QE doesn't work by adopting fake QE. They bought bonds from banks, which was never really the proposal. But anyway, they did that. And they said, oh, it doesn't work, so we stop it. So this was dragging on into the second decade now, 90s and 2000s.
Interest rates are ultra low.
And of course, interest rates, you put them to zero and
falling. The economy's moribund.
And of course, it doesn't work. If you put, interest rates don't drive the economy. Interest rates follow economic growth. I've showed that in my empirical work, and that's true worldwide. So this is part of the smokescreen that central banks everywhere use to misrepresent what they're really doing. They say, follow interest rates. You guys debate interest rates. That's our monetary policy tool. No, interest rates follow nominal GDP growth everywhere, and whether it's long rates or short rates. So they really have another tool, is the quantity of credit. Anyway, so Japan in recession, that was engineered by the central bank. Why? Very briefly, well, because they wanted structural change. As I show in my book, they're on the record saying, well, the recovery will be bad because then we don't get structural change. And of course, this was really the agenda pushed by America. America had been demanding that Japan changes from the early 70s onwards. The high growth model, that's no good. Officially, of course, they say things like, oh, you're inefficient. We can help you be an even stronger economy and more efficient. You just deregulate, liberalize, privatize, shift from exports to domestic demand expansion, and so on and so on, allow the foreigners to come in. You'll be a stronger economy. Got to laugh, when Japan delivers 10, 15% growth for 2.5 decades, and the Americans officially want to help Japan to be more successful. Obviously not. It was about dismantling the successful model, getting rid of a rival, dismantling your vassals. That's what they're doing in Germany right now, so Japan got the treatment first. And so that's why the Bank of Japan was doing it. But then Prime Minister Shinzo Abe read my book, Princes of the Yen, was a #1 bestseller in Japan already in 2001. Other politicians also read it, and I was at one stage official advisor to the LDP Central Bank Law Reform Group to tackle the Bank of Japan, which was causing all this. And he read it, and at one stage in 2012 made it a topic of his re-election campaign against all the political advisors, saying, oh, you can't take something as arcane as central bank policy as your topic. But people loved it. They realized by that time there's something wrong here. He tackled the banks around, and he said he would do the policy recommendations I put forward in Princes of the Yen. But in the end, as these things happen, once he then won on a landslide election result, he then fell short of actually making fundamental reforms, didn't change the power and influence of the central bank or increase the accountability of the central bank some way. It did not. He thought it's enough if I put my guy in, he thought, and his guy was Mr. Kuroda from the finance ministry. And I've known him, and I've met him a few times, and he's fairly traditional. And but still, okay, he gave it a try against all the other Bank of Japan bureaucrats to reintroduce QE, but a different type. We don't have to go into detail. I would have done it slightly differently, but it was better than before, that's for sure. Yeah. And he did finally kickstart bank credit. So we have this recovery then. And so then what has happened is Mr. Kuroda's time was up. And so it was 2 years ago. We've had now a new head at the Bank of Japan who's an insider, who's a true Bank of Japan insider. And so really this era where Prime Minister Abe, the mentor of the current Prime Minister, managed to get somebody into the central bank who was going to look at also making sure there's an economic recovery, there's economic growth. That era is over because there's now a Bank of Japan insider, one of the princes, is not directly a prince, but is one of the substitutes for the princes. This is insider group at the Bank of Japan that I describe in my book. At quantumpublishers.com is, by the way, where you can get it, because it's kind of hard to get otherwise. Is back in power now. So then it's interesting in this context now, with this background, look at the policies of the current Prime Minister, who has a strong mandate. She could do quite a lot of things to improve things in Japan, get economic growth and performance while having no inflation. The way to do this is to expand bank credit by many small banks to small firms, because then you get non-inflationary growth and high growth. I don't see that policy at the moment, unfortunately. The central bank is fully in charge. The central planners want to increase central planning, which means concentrating the banking system. The number of banks has been going down. That trend needs to be reversed. I don't see that happening at the moment. Also, there was a meeting actually, so Prime Minister Takaichi has only been in power since October, but she had, I think it was in November, a meeting with the current governor of the Bank of Japan. And it was interesting, to see what sort of atmosphere that will create. And it was one where there was no challenge to the central bank, no critique, and essentially one where the prime ministers gave the impression that we're not going to touch the central bank. They can do what they want. And that is a bit concerning. So that's at the moment the situation, that basically the crucial monetary policy angle is not being covered well. And what is being covered, as you mentioned, is fiscal policy. Now, fiscal policy has been the disaster of Japan because monetary policy has been so bad. Then you created this massive fiscal spending without an impact, without creating a recovery for 20 years. That's why Japan is the most indebted of country of any of the major countries in the world, the biggest debt to GDP ratio. And at this point, to further increase fiscal spending, when there's no prospect there's going to be backed by credit creation, because there's this lack of monetary policy support, is concerning for bond market. Now, even without further fiscal expansion, of course, what you mentioned was going to happen, that long-term interest rates were going to go up because thanks to Mr. Kuroda's policies, bank credit has gradually recovered from 2014 onwards. And that means higher nominal GDP growth. That means higher nominal rate.
You've set the scene really well, Richard. I think viewers need to understand that you are massively connected across Japan. As you've rightly mentioned, your book has been incredibly controversial, incredibly widely read in Japan. You may yet play a role in advising how Japan gets out of the situation. But let's just pull back the focus a little bit for a broader audience, if I may. Why is it? Let's try and explain to non-Japan specialists, maybe non-economic specialists, why it is that Japan may pose a danger. Please comment on the notion that because it's very hard for people to get their head around. So let's just keep it very, very basic, if you don't mind. Let's comment on the notion that as the Japanese government borrows and spends more, as Sanae Takaichi is clearly now going to do with her strong political mandate, the Japanese bond yield, the sovereign bond yield, what we call the Japanese government bond, the JGB yield, will go up. It's already been going up sharply since October, having been gone up for the few years before from, ultra low all the way up to 1.5%, then up to 2.5% and rising. That makes loans that the rest of the world has taken out in yen that they've then used to invest in high yielding assets, be it tech stocks, AI stocks, UK government gilts, whatever it is. It makes those loans more expensive. So then those loans in yen have to be repaid. People have to then sell their investments elsewhere to repay back those Japanese loans, because those Japanese loans are rapidly becoming more expensive as the Japanese government bond yield goes up, which increases borrowing costs across the economy. Now, in basic broad brush terms, it strikes me that is what is happening. How quickly do you think that process do you think that process could accelerate? And if that so-called unwinding of the yen carry trade accelerates, Professor Werner, what could the implications be for the rest of the world?
Right. So very briefly, there's some out there panicking. If rates rise, the huge Japanese national debt will become unsustainable, and then we get a huge collapse of the bond market in the first place, but maybe a broader financial collapse, and talk like that. Well, here people forget that the current pile of record national debt was funded at, close to 0%. And it's called, bond markets are called fixed income markets for a reason. Fixed income, fixed coupons, fixed interest. So that is fixed. And rates now going up for newly issued bonds doesn't affect what has been previously agreed. So that's the first point. That's often, you're not one of them, but other commentators often confuse that.
But no one is saying the Japanese government is going to go bankrupt. What I'm intensely interested in is the impact of the increase in Japanese government bonds on private investments around the world, and thus the impact on the rest of the world.
Right. Now, the yen carry trade, the key feature is that with a carry trade, you do not hedge your FX exposure. So people are borrowing in yen. These are foreigners, okay? And that's why, foreigners, speculators are concerned. And by the way, we should say who this is. This is largely hedge funds and similar type of investors, hedge fund investors. Because everyone knows this is risky, this is speculative. So we shouldn't get too sort of, concerned about this, because these are adults that, are supposed to know the risk that they're taking, okay? And it's not, a local saver in Britain. There used to be a phase where there were some mortgages denominated in yen, but that was a different story. And anyway, that sort of stopped in Europe mostly. People realized that could be quite dangerous. So this yen carry trade is where they, as you say, borrow in yen, Western speculators, and then invest in other instruments where you've got a higher yield. And the key is that they do not hedge their yen exposure. The risk is clearly that the yen is going to go up and strengthen. The interest rate is fixed because you borrowed at that low rate. So it's really, the risk comes from the exchange rate. So we need to talk briefly about the exchange rate. The yen is at still essentially close to a record low, a multi-decade low. And that's why this is really risky. If they were to hedge it, they would mostly have to give up the profit margin from the interest differential to pay that insurance, right? And, in the forward contracts, which you could use for hedging, you would, partly at least reflect this, but they're not hedging it. That's how the carry trade works. So they're taking this FX risk.
So they're unhedged. They're unhedged, which means the loan becomes more expensive to pay back because they've got to pay it back in a currency that's stronger than it was when they took out the loan. So
if
in
the yen
foreign
goes up,
terms,
that's the risk. That's the real
if
risk.
the yen goes up, if the yen goes up,
Exactly.
and we've seen the
Precisely.
yen go up 1-2% since she was re-elected.
Well, yes. I mean, my view is the yen is so wildly undervalued. You know, in Japan's economy, despite what they've done to it with this really bad monetary policy for the last 30, almost 40 years, you know, we know Japanese people are very hardworking. The companies are, you know, fairly productive and efficient. So it's not a bad economy, not a bad market. The yen is undervalued. It's super cheap. That partly, of course, is a central bank policy. That's again where the princes at the Bank of Japan come in. They listen to what America wants. This is a policy to shore up the dollar. That's really what's happening. Because the dollar has big problems, and we can talk about that in the future, you know, globally, we see the realignment of the global financial architecture and the currency system. And one way for the US to keep hanging on to, by their teeth, to some of the dominance of the dollar is to, again, use your allies, exploit your vassals. Okay, Japan, you got to have a weak yen because that means, relatively speaking, the dollar is stronger. And that's what's happening. So it's a favor by the Bank of Japan to the US, which is not really good for Japan. I don't think Japan needs such an extremely weak yen. You know, when the European currency was abolished and the euro was introduced, around 2000, they abolished the D-mark, which was the European currency. Of course, they called this the other way around. They said, we're going to introduce European currency. Well, that already existed. It meant that, of course, the euro had to be weaker than the D-mark. So really, it was about weakening the currency, and that weakened Germany significantly. Oh, it gives you these short-term profits. Oh, it's great for Germany. So people have been saying, oh, that's what Germany wants.
It's good for German exports, but in the end, it undermined the German economy. Can we come back to Richard? There's intense international speculation. There is intense international interest. Can we be very, very focused on the, if you don't mind, on the situation at the moment in the financial markets? The yen could easily go up. It's already been going up since Takaichi came to the top of politics, since she became prime minister, and since she was re-elected at the weekend. We agree that the yen is hugely undervalued. It's lost 2/3 of its value in real trade-weighted terms over the last 30 years. Of course it needs to go up. But as that yen goes up, all these loans by speculators, by hedge funds that they've taken out in yen, those yen are, if the yen gets stronger, those loans become much, much more expensive to pay back. So then those hedge funds have to sell their investments that they've invested in with that yen borrowing, and those investments might be AI stocks, those investments might be S&P 500 stocks, those investments may be FTSE 100 stocks, those investments may be UK government gilts. Those hedge funds, many of whom I know extremely well, they're getting really scared. They're going to start selling stuff in the West that's backed by yen denominated credit, right? And in that sense, I may disagree with you here, if I may, with huge respect, because I think no one's going to shed a tear if the hedge funds lose money, right? But a lot of these stocks that ordinary people have got their savings in, a lot of these stocks that ordinary people are being told to buy by relentless stockbrokers, particularly AI stocks, they are pumped up with yen carry trade money. If that yen carry trade then reverses because the hedge funds are losing an awful lot on the currency, as you rightly say, not on the interest rate, then stocks across the Western world are going to correct very, very, very sharply indeed. UK government gilts, which are pumped up with yen carry trade money, could contract in price very, very sharply indeed, which then sees their yields go up, which could seriously complicate the UK government's fiscal policy. So that's what I think. What do you think?
No, I agree. Actually, this is the risk.
Let's focus on that, because that's what the world is really interested right now, and the world wants to know what you think, because you've been proven right about a lot of stuff in Japan over many years, and I know it's been personally very painful for you that you've been ignored, if I may say so. But this is your moment, Richard Werner, because suddenly the whole world wants to know about this yen carry trade reversal because they're reading about it, not just in their Financial Times, they're reading about it in the tabloids. They're hearing about it, even thick broadcasters who know nothing about economics are ringing me up and saying, Liam, can you explain the yen carry trade? So let's talk about the yen carry trade. Could it unwind? Will it unwind? What would that mean?
Yes. Well, the moment the interest rate policy and also the quantitative policy of the Bank of Japan concerning the currency, the exchange rate, normalizes and switches from this excessive weak yen policy. And you could argue that partly that's happening, but still early stages. Then what we should see is that the yen carry trade gets rapidly diminished. Now, that is, of course, something all these speculators will be watching out for, and they're very much aware of. But if it happens very suddenly, there's a big move, then yes, it could have a negative impact, say, on U.S. stocks. But you see, with U.S. stocks, there's so many indigenous factors that have already made it quite clear that we are in a very late stage phase of an asset bubble in the U.S. as well. I mean, the economy.
I agree. Just to put a context
in there, disjoint between the economy in the US and stock prices. And then when we say stock price, it is really, as you mentioned, a certain very small segment, AI stocks and other, a small group of stocks that have done really well for a very long time. And you wonder how long this can continue. So it's just adding a further pressure point and further trigger for a potential, financial crisis in the US. But there's many indigenous factors one has to be aware of as well. So, and of course, we have other central banks implementing their policies. We also, looking at Europe, because often you can say, well, okay, if there's a problem in Japan, but it's fine because there's many other stabilizing factors. Well, no, in Europe, things look pretty bad. As the German economy is in the third year of negative GDP growth. Yeah. The last time this happened was in 1933.
Wow.
So it's a pretty bad situation. And the government
seems a pretty powerful observation about the impact of economics potentially on politics. That's a very powerful observation.
Absolutely. So
can we stick with Japan? If you don't mind, can we stick with Japan?
Sure.
So what is of huge interest here is whether or not the yen is going to go up. Because if the yen goes up sharply, then the carry trade could unwind suddenly because the speculative investors who've pumped up the price of assets in the West that a lot of ordinary people are invested in, the speculative investors will want to unwind those yen loans quickly because the yen loans are rapidly becoming more expensive to pay back because they borrowed in yen, they got to pay back in yen, right? A lot of them are, as you say, are unhedged because they're greedy and because they're reckless. I think we can agree in many cases. So do you see the yen rising sharply over the next few months?
Ultimately, yes, but when will this be?
Yeah. And how concerned should we be? The yen does rise sharply.
Right. So concerning the timing, I already thought, I must say, maybe 6 months ago or so, that it's time for the yen to strengthen. And, so I was a bit early. And I think it's just so excessively undervalued. But the win now, the strong election win by the Prime Minister Takaichi in these elections and this meeting with the Bank of Japan, to me, indicates that maybe this weak yen could last a little longer than I thought.
Interesting.
Because the Prime Minister is not challenging the Bank of Japan on anything, but also not on this weak yen. There's a lot of finance ministry bureaucrats and METI bureaucrats, the other ministries saying this is not good to have such a weak yen. We're storing up other problems here. And of course, it also invites a lot of foreigners to buy up Japanese companies and so on, which is also not really that popular in Japan. And so previous politicians have said things like, well, we don't want too weak a yen. So that's something to watch out for when the Prime Minister comments on this and what the comment will be. So far, from what I can see, she has not really been critical of the currency policy. Also, we should, just for the viewers, it's important to realize that there's a bit of confusion here about what actually drives the yen-dollar rate. And of course, currencies are one of the hardest things to forecast in financial markets, full stop. You know, there's, all the modelers will admit that it's the hardest. Random walk is often hard to beat, but there are fundamental factors. And one that is often mentioned and is, in my view, overstated is the official currency intervention by the Ministry of Finance. Now, according to the law, foreign exchange intervention, where, say, the Ministry of Finance gives the instruction to, in this case, buy yen and sell dollars, because it is in charge of the foreign exchange reserves, one of the largest in the world, not anymore the largest, but still one of the larger piles of FX reserves, dollars, mostly held in US treasuries. And so they can sell those and buy yen to strengthen the yen. But this is a gross transaction. It will only work if it's backed by the central bank, because they can easily sterilize this, because they are the only ones that have access to the money creation process. The Ministry of Finance doesn't, or only extremely indirectly if they want to work on the banking system, which they don't. So in the past, what has happened when the finance ministry and Mr. Yen, the vice minister of international finance, and that was actually the position of Mr. Kuroda before becoming governor of the Bank of Japan. He was the Mr. Yen of his day. They order these FX interventions, but as I've shown in my work, almost always, they've been sterilized by the Bank of Japan, who does what they want with the exchange rate. So people shouldn't get confused when there will be another news story about, FX intervention ordered by Ministry of Finance, this, that, and the other. That's just a gross figure. It's the net figures that matter. They are made up by the Bank of Japan, because they can so easily sterilize this, and they have a record of sterilizing that. So it is the Bank of Japan that ultimately has the single biggest impact on the FX rate. And also, of course, any FX intervention ordered by the finance ministry is implemented by the Bank of Japan. So they have this agent job where they do the gross transactions for MOF, but like some of the big financial institutions, Goldman Sachs, betting against their clients, people say, they can play, okay, we've got these orders from MOF. Now, how are we going to play this? We don't actually want the yen to strengthen. And so they counteract it. That's sadly what happens. So with the Bank of Japan not being challenged, my bet, therefore, on this is that the weak yen could continue further. I mean, it doesn't make sense. It has negative consequences in the long run. It's not good for Japan, but the Bank of Japan has been doing it, and now they're not being challenged. So the bet is it could continue further. But that, of course, just means that your question and this issue is not going to go away. We're just going to delay until something happens. And then, because, clearly, this is like with zero interest rates, they weren't going to continue forever. And likewise, this excessive yen is not going to continue forever. When it then snaps, then it could be more painful.
That's a fantastic summary, if I may say, Professor Werner. And I apologize for pressing you into a particular line of inquiry, just because there's so much interest in this and you have such incredible knowledge. It's really your life's work. You're one of the premier, I would say the premier Japan watcher, outsider, if you like, when it comes to the Japanese economy. Though you've been an insider, of course, and I know you're a modest man, as you mentioned. I should say that just journalistic rubric, Goldman Sachs would certainly deny that their prop desk would ever trade against their clients, or they would undermine their clients in any way. I just have to say that. So just to summarize what you've just said, you think there's a lot of commentary about the yen carry trade unwinding. An awful lot of people in the media don't actually understand what that means. An awful lot of people holding stocks and shares across the Western world don't really understand what that means. But if I interpret you correctly, Professor Werner, your view is that there's still an awful lot of political circles to be squared, if you like. There's an awful lot of political differences of opinion within the Japan ruling establishment. It may be that the yen isn't going to appreciate sharply because there's still interests in Japan who don't want it to appreciate sharply, and you've demonstrated that. And if the yen doesn't appreciate sharply, then the yen carry trade will carry on because there's no need for overseas borrowers who've borrowed money in yen to pay that yen back quickly by selling their investments in the West, which you see the price of those investments fall, because what scares them is a sharp appreciation of the yen. And if the yen doesn't rise sharply, then there's no reason for them to sell their assets in the West. So I agree with you. Western markets are completely overvalued. You've got what we call a Case-Shiller index, just to explain that to non-specialists. You know exactly what I'm talking about. The cyclically adjusted price earnings ratio, the Cape-Shiller index. Shiller is Robert Shiller of Yale University, the academic who created that highly influential index. At the time of the 2008 financial crisis, which was a banking crisis, of course, rather than a stock market crisis, that became a stock market crisis, the Cape-Shiller index was about 28. It's now up above 40. So the S&P 500 stocks in it are valued at 40 times their annual earnings, which is very, very high. And over half of the S&P 500 is, of course, AI-related stocks. You know, Nvidia now is worth more, I hate to say it, than the entire German economy, which is the third biggest economy in the world. It's worth more than the entire Japanese economy, which is the fourth biggest in the world. Japan, of course, losing that third slot because of the yen depreciation that you and I have been discussing. I think you've explained your position. I think you've explained your position beautifully, as you always do. I mean, I'm very keen to help you convey your very, very deep knowledge to a broader audience, if you'd like to do that. I just wondered, as we draw this to a close, what you actually think will happen. We've talked about the scenarios. I've put forward the scenario that the yen carry trade could quickly unwind. You've very elegantly and knowledgeably said it may unwind, but it may not, for the reasons that you've explained. So I think we've given viewers a good overview of what's at stake here. But to put you on the spot, what do you actually think will happen? What's your actual prediction?
Well, so I do think that we have a delay, a postponement of the yen reversing, because the Bank of Japan is not being challenged on it, and that means it will continue to do what it actually is being instructed from the Fed in the U.S., mostly New York, and that is, keep the yen weak as long as you can. So they feel, okay, we can now a bit longer because nobody's challenging us directly. The prime minister seems okay with what we're doing. And I guess her advisors have put her focus elsewhere. So she's probably not spending too much time on this. And so they're going to get away with it for a little bit longer. That's what I'm saying. So don't put on your bets on the yen rising just yet.
Interesting.
It looks like with this election result, this will be a bit later. This doesn't mean that interest rates aren't going to go up. I think they will go up. But here you have to remember, because interest rates follow growth, and growth has been gradually rising in Japan. There is not a one-to-one between interest rates and exchange rates. It's more the quantity policies of central banks that determine these exchanges. That's why you can have this contradiction there.
Mm-hmm. I think that's beautifully summarized. And again, sorry to have pressed you. There's no disrespect intended. On the contrary, I think you've done incredible work over the years, and I've admired your work for a long time. We did a documentary together, didn't we? In 2013, where you and I talked about quantitative easing on Radio 4. I think
indeed
it remains pretty much the only proper mainstream examination there's ever been of quantitative easing, and it was incredible that we managed to get it on the BBC in a mainstream Radio 4 documentary. Just I guess my final question would be, why do you think it is that the US wants the yen to stay weak? Obviously, a lot of people think Trump wants a weaker dollar because rather than a stronger dollar, because that helps exports and that helps, manufacturers in the US and their MAGA voters, the people that work for the manufacturers and so on. That's Trump's base. On the other hand, of course, Trump wants the dollar to retain its reserve currency status. So is that what you mean? Is that where the Fed, in your view, the US's desire for a weaker yen comes from? Because it wants the dollar to remain the dominant reserve currency, and Japan could have challenged that.
That's right, and this is actually a very important point you're hitting on here, and I've written a bit on this on my Substack, rwerner.substack.com, and there's another piece coming up, because it's normally argued always that a weak yen is good for, a weak currency, weak dollar, weak euro is good for the countries concerned because they export more. But that's very, very superficial analysis. That is mainly true for low value added exporters, commodities exporters, developing countries. For advanced countries, industrialized nations, the economists would say the income elasticity of demand for their goods is greater than 1, and therefore, actually, what you find is that over time, the demand for their higher value-added goods tends to be much more stable, not so dependent on price swings, and really, what then a strong currency does is, and this is true for both Germany and Japan, key examples. They had strengthening currencies in their high growth periods. It was not a problem. In fact, it's a benefit, because the other factor is purchasing power, and that's more important, because when you're importing raw materials, you add value and export finished goods, you want to have higher purchasing power. Demand for your exports is not so price sensitive, because you have proven that it's good quality, you specialize, people want this no matter what happens in the small price movements. Whereas on the other hand, you want to buy the raw materials cheaply, but also a strengthened currency puts the necessary pressure on your industries to constantly upgrade and stay ahead of productivity. So the pressure to be constantly innovate,
they keep innovating.
New technology is there when your currency rises. That's why advanced countries really need also a strengthened currency. Is very natural. And that means also geostrategically that they then have more purchasing power, not just to buy raw materials, anything. Strategic acquisitions. In the US case, they have to run a lot of foreign military bases. If the dollar collapses, that is a big problem. The purchasing power collapses, and America can't fund its global presence anymore. And that's more important, really. Of course, America does have some agricultural exports, which you could say are maybe on the more low value added rank, but I think Trump is really, when he talks about exports, not just talking about farmers. We know that because he's just invited Argentinian beef into America. So really, it is more the high value things, and for those, it's the strengthening exchange rate that's more beneficial.
That is, again, beautifully explained, if I may say so. Professor Richard Werner, I think this has been a very important interview. I think your work should be followed even more than it is. I think you have unmatched knowledge as a non-Japanese insider of what's actually going on here, and I thank you very much for appearing on When the Facts Change.
It's been a pleasure. Always a pleasure. Thank you.
Nicholas Hopton, great to have you with us. As the former British ambassador to Iran and indeed Qatar, Yemen, Libya, the Middle East, North Africa very, very well. As a regional expert, as somebody who I know cares deeply about the Middle East, What's at stake here with the Americans negotiating with the Iranians? What's at stake for the region and for the world?
We're at a pivotal point, Liam, between some very varying different scenarios. At one end of the spectrum, if the present tensions in the region were to descend into military conflict, as they did for 12 days last summer in the war between Israel and Iran, but there would be a high risk of escalation and destabilization of the region, and that would have outcomes which we can only guess at, but it could be a very destabilizing next phase if there is a military conflict at this point. And at the other end of the spectrum, we're seeing negotiators from the United States and Iran, facilitated by the Omani foreign minister and others in the region, working very hard to try and put together a deal. And the shape of that deal is not yet clear. There have been deals, of course, before between the United States and Iran involving the Europeans and the UN and EU countries. That was called the JCPOA in 2015. It subsequently unraveled, partly due to the United States president taking a different approach from his predecessor, President Obama, who had put it together. And this is an attempt, perhaps, to create a new deal, which would be one that President Trump would hold up as a victory, and that would be a diplomatic outcome. In between these two widely varying scenarios, there are other outcomes which are quite possible, including a muddling along in a situation we've seen for the last 2 years, over 2 years, since the 7th of October, following the Hamas terrorist atrocities in Israel and the subsequent conflict in Gaza, all of which have been a new chapter in the Middle East's history and security landscape. So we're at a pivotal point. Essentially, if I was to characterize it, Liam, I'd say we're in an intense period of diplomacy in these days, with a high risk of miscalculation and possibly military conflict.
The diplomats are doing their work. I happen to be in Amman at the moment, as you know, on the motorway. Yesterday, we saw a huge motorcade, Iranian flags flying off the front of the cars as I imagine it was the Iranian delegation, the foreign minister, talking to his Omani counterpart. Oman, as you say, acting as the host of these discussions. Lots of us of a certain age will remember our television screens telling us of the Iranian Revolution in 1979, a huge moment when the Ayatollahs took over. Could we see something like that happen in Iran now, Nicholas? Could we see regime change in Iran from within?
Since the 28th of December, at the end of last year, there have been a new wave of protests within Iran. And those protests, as the world watched at the beginning of January, escalated into the most significant protests against the Islamic Republic since the 1979 revolution. On the weekend of the 8th and 9th of January, thousands, possibly tens of thousands, the figures aren't verified, but certainly huge numbers of unarmed protesters who are simply asserting their rights under the present Iranian constitution, a right to protest, which the authorities have acknowledged. But they imposed a media blockout, an internet blockout, and massacred, I use the word advisedly, thousands of their young citizens, because many of them were very young. And it is a demographic that is very significant in Iran, as in so many countries now, that the majority of the population are young. And in Iran, those highly educated young people, and many of them are students or have comparable levels of education to developed Western countries, they want a better future. They want to be able to express their voices and choose the people who govern them. And above all, there is a feeling in the country that the economy needs to be run better. That was the trigger for this latest wave of protests.
Cost of living.
Just to be able to live properly, to be able to feed families, and the rial, the currency in Iran, has been in free fall in the last month. And I think that was the trigger, although the protest became very much more about a different kind of regime taking over. Now, those protests have been oppressed, and they have stopped more or less for the time being, although some are still continuing, obviously. So superficially, the regime has succeeded in crushing that attempt to get a better system, a different system of government. However, this is just the latest in a series of protests, and we could go back over the years. There have been many other significant protests, most recently before this in 2022, when a young girl, Mahsa Amini, was brutally killed for not wearing her hijab properly. So the regime, in my analysis, is dying a death by 1,000 cuts. This is the latest cut. We don't know whether this is going to be the final cut or whether something we'll have to witness further protests and repression in Iran as things go on. Obviously, what happens in the negotiations at the moment between the United States and Iran will have a bearing on the immediate situation for the regime. Can it survive? Can it carry on to fight another day? Clearly, the Iranians are both playing for time, but would also, at this point, probably accept a deal which allowed them to survive, rather than, and even if they had to make very significant compromises, possibly bigger compromises than they made in 2015 in the Joint Comprehensive Plan of Action. They fear, I think, in the regime that U.S. military strikes on Iran this time, as President Trump has said, in his words, they would be very tough. They would be harder than U.S. military action last June, which brought to an end that 12-day war with Iran, but was very specifically targeted on nuclear sites and regime targets rather than a more widespread military attack at that point. This time round, it may be different, and I think the Iranian authorities will be worried that may reignite protests, that might lead to further destabilization within the country, and they might lose control completely.
As we speak, pretty heavy US naval power is very much in the region. As we speak, there are intense diplomatic discussions going on. What is President Trump's motivation here, do you think? As you say, he basically unraveled or made sure that Obama's Iran deal was unraveled during his first term in the White House. So what is President Trump weighing up? Does he want regime change in Iran? Is he actively going to try and pursue that? What do you think is going on in Trump's head at the moment, Nicholas, to the extent that anyone can ever know what's going on in President Trump's head?
Clearly, President Trump is no friend of the Islamic Republic in Iran. That's been consistent throughout his public career. However, at the moment, he'll be weighing up different pieces of advice he's getting from very key allies in the region, as well as his more traditional allies, such as the United Kingdom. At the moment, the countries closest to Iran geographically, the Gulf countries in particular, have made clear that they would support a new deal, and they're working very hard to support the United States and bring together negotiators from Washington with negotiators from Tehran, including in Oman, which has been the center of talks in recent days, brokered by Saeed Badr, the outstanding Omani foreign minister. And Oman has a particular role to play. Oman was also the place where the JCPOA deal was put together after the election of a more moderate president in Iran in 2013, and the deal was done in 2015. It took time. We don't seem to have the same amount of time this time. But those countries are are encouraging the White House, President Trump, to look for a deal. Now, on the other hand, we know that Prime Minister Netanyahu of Israel is in Washington at the moment. And he will be probably, almost certainly, counseling something quite different. In the Israeli government's calculation, a deal would simply allow the Islamic Republic to survive, would bring with it a lifting of sanctions to some degree at least. Otherwise, the Iranians wouldn't sign up to it, so that their economy can get going again, can be rescued from the dire straits it's in at the moment. In other words, a deal would support the status quo in Iran. And clearly, Prime Minister Netanyahu does not want that to happen. And he will be offering different kinds of advice to President Trump at this point, including possibly, we don't know, but including possibly encouraging President Trump to use the military might of the aircraft carrier Abraham Lincoln and other assets he's got in the region to strike Iran, in the hope, perhaps in Prime Minister Netanyahu's calculation, that that would provoke regime change. Now, where would President Trump be? Clearly for him, in many ways, it's going to be a political calculation. And he will be wary of being the president that starts a new war in the region. He will not want to be the president who creates a more destabilizing, possibly longer lasting conflict than in Iraq. And we saw how that went. We've all learned the lessons of that to a degree, I would hope. He claims to be the president who brings peace. He's, according to one claim he made recently, he's solved more than 8 wars since he came to power this time round. Now, one can think of that in whatever way one wants, but I think that does point to a president who actually would probably prefer to be able to strike a deal, claim that he's got every concession that he wanted from the Iranians, that they are no longer a threat in the region, that they're going to behave themselves with their neighbors and stop funding proxies and creating more conflict. He will claim, if he does a deal like that, that this brings more security and stability to US's close allies in the Gulf and in Israel. So he will possibly be more tempted at the moment by an outcome which the Iranian regime also wants, which is a deal. Now, that doesn't mean there will be a deal, but at this particular point, that is clearly worrying Prime Minister Netanyahu, which is why he got onto a plane this week and is in the White House trying to influence President Trump's decisions on what to do next.
That's beautifully put. So let's say there is a deal and USS Abraham Lincoln and the other hardware that's around isn't used. It's there on the table, if you like, but it isn't activated. There is a deal. The IRGC, the current clerical regime, remains in control. How would Israel then react, do you think? I know it's difficult to make predictions, not least in this region, but what do you think Netanyahu would then do, given the domestic political pressure that he faces?
Well, we're into crystal ball gazing territory here, Liam, aren't we? I mean, I think all one can say is to note what's happened in the past around the nuclear deal of 2015 and how Israel was opposed to it and continued to oppose it. And then when President Trump came into power, they strongly supported his policy of maximum power, which led to the US withdrawing. It also provoked a hardline reaction and then the election of a hardline government in Iran, half a decade of standoff between the West and Iran, which has led to the present impasse. That approach didn't seem to work particularly well, but that would be one idea. I imagine that Prime Minister Netanyahu would be to pursue that. You can also look at what happened in the beginning of June 2025, when the US and Iran, people may not remember this, but in the first half of last year, there were a series of negotiations taking place between US and Iranian officials. And 5 rounds, is my recollection, had taken place, and a 6th was about to take place in Oman again, and at the beginning of June, and that never happened. And that there was talk that the US and Iran were very close to a deal at that point already. What stopped that happening was that Israel preemptively launched military strikes on Iran. And that was the beginning of the 12-day war, which initially the US wasn't quite they didn't seem totally sighted on how this had happened and how to react, but very quickly came in support of Israel. And that killed the negotiations at that stage. I imagine if Prime Minister Netanyahu's calculations are still the same, which they seem probably to be, then he would hope to see military action at this point rather than a deal leading to a deal emerging from the negotiations.
Nicholas, you were British ambassador to Iran from 2016 to 2018. You clearly have a deep knowledge of and affection for the country's people, its culture. I've travelled to Iran in the past. What a fascinating country. What could Iran be? This is a country with an incredible endowment of resources. This is a country with a very high level of not just secondary but tertiary education. This is a country with an incredible scientific, artistic, mathematical culture. This could be, one of the most interesting emerging markets in the world, couldn't it, as an investment destination? Do you still hold out hope that the likes of you and I, the age that we are, we could see that in Iran, without wishing to sound morbid, but in the next few decades, in our lifetimes, effectively?
Well, as a diplomat who'd been involved in the region for a long time, I learned a long time ago that optimism is nearly always misplaced. And you've at the same time listed all the extraordinary attributes of Iran and its young, dynamic people who are warm, sophisticated, with an extraordinary history which goes back way beyond Northern Europe's civilized history. And they have brought so much to the world over the last 3 millennium. So it would be a very positive thing for the world if Iran was not a threat in the region, did not oppress its people, and engaged in a proper way in the international community, in trade and other aspects. One could add to the things you've talked about the huge diaspora of Iranian origin people around the world, particularly in the UK, the US, France. And they hundreds of thousands, and they all demonstrate extraordinary passion and patriotism for their country. And I think if Iran was governed in a different way and they were able to be involved and return to it, then I think that would benefit the world as well. So all of that is true, but as I say, optimism is rarely justified when it comes to Middle East politics and security issues. It's often a case of avoiding worst case scenarios in the diplomacy. That's one reason negotiations are to be welcomed at this point, depending on the outcome, of course. It's better that the Iranian and US leadership are talking rather than fighting. In my view, the UK has a strong role to play. We often forget that we have a strong history and legacy in the region, including in Iran, and we can bring positive aspects to the table at key moments. So my hope is that we do see something emerging, including in our lifetimes. It's not impossible. As I say, I don't think this regime is forever. It may be dying sooner rather than later. We don't know which of the many thousands of cuts it's suffered since 1979 will be the fatal one. The recent protests have demonstrated the Iranian people are ready for something different, the majority of them. And regimes do not survive forever when they oppress and kill their people in the way that the Islamic Republic is doing at the moment. So I would hope that our country and our allies work with others to support a much better outcome for the Iranian people.
Final question, if I may, Nicholas. You know Saudi as well. Saudi, of course, is a huge Sunni nation, just as Iran is a huge Shia nation. Not exclusively, but they're the broad patterns. There's a great ancient rivalry between the Saudis and the Iranians. Where do the Saudis sit in all this? Still hugely influential, not just in the region, but in the US as well. What role will they play? Will they be figuring in President Trump's thinking?
I think the voice coming from Riyadh will be listened to very carefully in the White House, not least because it is the biggest and heavyweight of the Gulf countries, who are very important US and Western allies these days. The Saudi position seems to me to have evolved significantly in the last decade when it comes to Iran. Back in 2015, when the nuclear deal was being struck, the Gulf countries as a whole, including Saudi Arabia, were skeptical and were not in favor necessarily of the kind of deal that emerged, exchanging lift of Western sanctions, UN, EU sanctions, in exchange for constraints on the Iranian nuclear program. They wanted to see something much broader, a deal that would have constrained Iran's ability to fund proxy terrorist groups such as Hezbollah and Hamas, the Houthi in Yemen. They wanted to see something much broader. Also, they would have liked to see constraints on Iran's new missile program, and which has developed significantly over the last decade. And Iran's military hardware should not be underestimated. Remember, they have supplied Russia with a lot of the drone technology that is used in Ukraine. So that was the position a decade plus ago. In what changed largely seems to me a few years ago, the Saudi emphasis moved from being on the security of the region, seeing it through that lens, more to the economic development of the country, the kingdom itself. And you know about the extraordinary, ambitious, high-value infrastructure projects that have been taking place in Saudi Arabia in recent years. And I think that is the lens through which Saudi and other Gulf countries see the question now. And therefore, it should not be surprising to us that they are clearly in favor of taking the heat out of the present tensions. They want to see an end to this latest phase of conflict and destruction in the Middle East, which was reignited on the 7th of October 2023. They want to see stability in the region, and they think that probably the best way to go forward on that is through some sort of renewed deal between the United States and Iran. And that is why you have seen intense diplomacy coming from the Gulf countries, including leading voice from Saudi Arabia, towards Washington in recent weeks. You see the Omanis playing this significant brokering role in the deal negotiations at the moment, but also balancing to an extent, perhaps, Prime Minister Netanyahu's rush to Washington in the last few days to try and influence President Trump's thinking. You've also seen the Emir of Qatar making démarches and talking with President Trump, and he will be giving a very different type of advice, I'm sure, and he will be reflecting the views of other GCC countries like Saudi Arabia to the White House that this is a time for a deal, reduce tensions, produce stability, and a different approach to dealing with what is a massive, important regional player, but at the moment is seen as a threat, quite rightly, which is Iran. So I think the Saudis, with their GCC cousins, will be wanting to see that kind of deal emerge.
Nicholas Hopton, it is a grave moment. The world's attention should be rightly focused on the region and these negotiations. But thanks so much for sharing your deep knowledge with us. It's much appreciated.
Thank you.
So that's it this week. If you like my show, then please help me keep it going by spreading the word about my interviews and my Substack. Thanks for joining me on When the Facts Change. Thanks for joining When the Facts Change, economics and politics in a fast-moving world with me, Liam Halligan. Please subscribe to my When the Facts Change YouTube channel and my podcast via Spotify, the podcast app, or wherever you listen. And above all, please subscribe to my When the Facts Change Substack for more of my interviews and writing.